Well, the temporary silver sell-off from late Sunday night appears to be over. On today's market, we went up over $8 an ounce. We're holding this $100 mark very nicely now. Remember, as late as last Friday, we went over $100 for the first time. Today is Tuesday, January the 27th of 2026. Yesterday, we were up over $100 for the entire day, closed at about $103.78. But today, we not only held the $100 mark, but we actually advanced quite nicely throughout the day. And we did so on some incredibly heavy volume. I mentioned yesterday that we sold over 1.5 billion ounces of silver on the March contract for the COMEX, which is over 1.5 times the annual mining output in the world. So yesterday's volume was incredible. And for us to have held the $100 mark, I think was very significant. Well, today the volume was once again very high. It was over 220,000 contracts. That was a total of about 1.1 billion ounces just on that March contract. And so we were looking at about 1.3 times the annual mining production that was traded on the March contract for silver. And so the reason that this is important is because now we're starting to establish a new base. It's very new, so it's not by any means guaranteed that we're not going to drop below 100. I do believe there was a pretty good run at 100 yesterday after it reached its all-time high of $117.84, but that was stemmed towards the end of the day, and then today it picked up very nicely, and we finished with an $8.31 gain for the day. And so we've had some incredible moves of late. In the past, where silver might not move $5 in a 20-year period, now we're moving $5 sometimes within an hour's period. And so on a daily basis, the range very often, usually at least in the last month, has been greater than $5 an ounce. So we are in not only uncharted territory as far as prices, but we are in uncharted territory as far as volatility. And so it is nice to be able to wait till after the market closes and catch our breath. It's about a little after 4 o'clock Central Standard Time on Tuesday. The market is now closed. It'll open back up at 5 o'clock Central Standard Time as it begins to trade on the overseas market. We do seem to have a very nice range that might be establishing itself. Yesterday, we had a $16 span from $101.85 for the low to $117.84 for the high. We now actually have a top in the market that we can look at as far as going by a range. And then certainly, although $100 is below the low of yesterday, it gives us, I believe, a base to keep our eye on. If it closes below $100, and it does so on a day with high volume, conviction, in other words, then we may be in for a little bit of a correction. But if it can't do that, and believe me, there's a lot of players that would love to see it go below $100, but if it cannot do that, that's going to give you an idea as to the overall strength of the market. There's a couple of factors that happened today that were in the news that I think are somewhat significant that would be very helpful for us to understand what's going on and just exactly what kind of pressure the market had on it. JP Morgan has been recommending to their clients that they get out of silver and switch over to gold. Well, that's very interesting, especially since JP Morgan is said to be quite long silver right now. Are they really long right now, or are they trying to get a little bit of silver freed up? It's interesting when you think about it. They have clients on both sides of the trade, both long and short, and yet they're recommending that they go ahead and get rid of the silver position and add to the gold position. And yet the response by the market was to go up by about 8% for the day. That should tell you something. If news like this that used to move the market down pretty severely is absolutely ignored and the market goes up, well, that again tells us a little bit something about the market strength. there are certainly pressures on the retail side, and we've been talking about that in recent weeks. I don't think we need to ignore this because those of us who trade on the retail side, especially if you're needing to sell, it's getting to be a little bit harder. And you can expect to take probably at least a 10% hit from spot. And that's for 999 and maybe even sovereigns. If you're trading 90%, well, you can be looking to be taking anywhere between a 15 and a 20% hit. As a matter of fact, the two largest online dealers, or the two that I look at, they may not be the largest. I don't want to ignore AppMex or PIMCO or some of these others, but I can get the prices very quickly from JM Bullion and SD Bullion. They put it right on their websites, and so that's very helpful. And so JM Bullion was about $23.50 below spot for 90% and about $2 over spot when they're selling it to the public. Now, SD Bullion is much better. I believe they're a lot closer to somewhere along the lines of maybe 12 below spot right now for what they will pay you for your 90%. While that in the past has not been that attractive, it's getting to be more and more attractive, especially as we see the local coin shops ceasing to take 90% silver in many localities. It's true that there are some local coin shops that are taking 90%, and those that are probably doing better than $12 to $23 back of spot, but they're getting fewer and farther between. I like that the Silver Dragons YouTube channel. He interviews a lot Harry from Harry's Coin Shop in Oregon, and I've done business with Harry in the past. I believe has the utmost integrity. There's a gentleman by the name of Adrian that's extremely knowledgeable, and then they've got some other people that work there that are just top notch as well. And so I was listening to this interview today, and Harry was pointing out that it's not just the silver that the refiners are starting to slow down on. As a matter of fact, most of their refiners will no longer take silver in any form. If they do, they want it to be 999, and they're going to give you $15 back of spot. If you want more than that, you're just going to have to wait until they get around to refining it, and they'll pay you whatever spot is that day. And so it's a very difficult situation in the silver market, but the gold refining is one I found very interesting. In the last year, it's been very strong. The dealers, local coin shops haven't had any trouble unloading their gold if they weren't able to sell it to the public. Well, Harry's Coin Shop mentioned that their largest refiner gave them notice that they would no longer pay them cash for their gold, that they would refine it, but it would be between 7 and 10 business days. So we're looking between 10 and 14 days now, nearly 2 weeks before they can get their gold refined, and they will not give them a locked-in price anymore. They have to just wait until they refine it before they'll know what the price is. And so we're starting to see a lot of tightening with the local coin dealers. They're under a lot of duress. Those that are still buying silver and gold, I believe, are doing a tremendous service for us. For those that you don't like the prices, just shop around and see what the best price that you can find. I really don't think there's many dishonest dealers in the business, especially those who've been in business for several decades anymore. There are some, but most of them, and certainly Harry is one of them. My local coin dealer in Amarillo is one of them. Most of them are as honest as the day is long, and they're trying to do the very best they can for their customers while at the same time being able to keep their doors open and being able to keep from going bankrupt. So the retail liquidity crisis is not only very real, but it has caused many, if not most, of the local coin dealers around the nation to just flat out stop buying silver, at least in unlimited quantities, especially if you're looking at something like alloyed silver, sterling silverware, or just scrap silver. But even the 90% U.S. coins, they're going to balk at, and certainly anything that's foreign silver, unless it's of a rarity that they normally trade in, they're probably not going to buy that either. So the retail liquidity crisis is very real. If you don't have to sell right now, then don't worry about it. It doesn't affect you. These things have a tendency of working themselves out as time goes by. And so there's really not anything for you to be concerned about if you weren't planning on selling it anyway. And if you are, just shop around, look at some of the big online dealers, call up your local coin shops, and find out who's going to be able to pay you the best price in the most efficient, the quickest way. And I think that's the best you can do right now. But don't be looking for anything near spot when it comes to 90% or fabricated silver right now, because the dealers aren't getting anywhere near spot. Now, I mentioned that some of the online dealers are certainly selling their 90% for around spot. As a matter of fact, JM Bullion selling for $2 over spot, and SD Bullion is selling for $1 under spot. I really appreciate them for the fact that they do provide liquidity in a difficult market, and they advertise their prices so you can see what they're paying. The next thing that I wanted to talk about was just this. As we have established a new range, and again, it's so new, I don't know that saying established is quite correct yet, but I do think that now we've got a couple of spots that we can keep our eye on. This nearly $18 high, the all-time high that we achieved yesterday, and the $100 mark that we just surpassed this last Friday are two very important points. The $100 mark being the most important. We've only closed over $100 3 days now in the history of the silver market. Yesterday, we set an all-time high at the 117.84, but today we actually closed about $8 higher than we closed yesterday. And so today's closing was an all-time record closing high. We're in very good shape right now, especially with some of the pressures that we're seeing in the market. The retail side is a very small segment of the market. I've had a lot of people ask me, why, if we're getting these record prices, why, if there's such high demand on the exchanges, are we getting such low prices? And the difference is the difference between retail and the exchange prices, which is more of a wholesale price. The big players, the industrial users, the commercial users, the sovereignties, they're the ones that are coming in and buying these 5,000-ounce silver contracts for their immediate use or for the purpose of stockpiling it. They have a very strong need to get that silver right now, and so they're willing to pay that price. On the retail side, you've got a lot of people who are pretty excited. They never thought they'd see $100, and so you've got some stackers that are selling a little bit at 100, but you're also seeing a lot of the public who didn't even think about silver before hearing about it on the news right now, and so they've been flooding the market for a while. I think the very fact that they've been doing it for so long now is an indication that we're probably getting closer to the end of the glut than we are the beginning of it. And so that should give you some comfort. How long this will take to work out is anybody's guess. Right now, the refineries are at least 6 weeks backed up, and they don't want any more silver. So that gives you an idea of a minimum. But as they continue to get in more supply, some of these people who are actually buying, as soon as the refineries get a little bit of a breather, they're going to be overwhelmed again with new products. So it's going to take a while to clear out. But I think you can see the light at the end of the tunnel on this supply glut. And I don't think it's a train coming the opposite direction anymore. I do think that we are going to see some prices on the retail side return a little bit closer to spot. And they may even actually turn around and we see a return to what we had 2.5 years ago, where they were paying about $10 over spot for 90% silver. So if you're patient, if you don't have to sell, this might just be a time to just sit on the sidelines and watch. One of the wisest things you can do whenever you're in any market is, if you've already accumulated to a point where you're satisfied with your holdings, you can just sit still for a while. If you can just kind of sit back and watch and see what the market is doing right now, and you have that luxury, then do that. You won't get so caught up with the daily fluctuations. They're wild right now. It's like a roller coaster just gyrating that's actually off the tracks and doesn't have any bounds right now. And so the more you can just kind of sit back and observe it, I think the better it will be for you right now. In these types of ranges, if you have a desire to trade, Well, I think I would look at something more along the lines of paper, silver. Right now, I know a lot of y'all don't want to hear about paper, silver, but for some of us who have traded in the mining stocks and even in SLV, there are some short-term opportunities. And if you've got all the physical that you intended to have anyway, and this is not a bad place to park your money for a little bit. The silver miners, the gold miners may actually be somewhat undervalued. They may be playing catch up right now. We don't know that, but it does appear that they have not kept up with the same frenetic pace that miners typically do. And so you just got to use ranges like this to determine whether you want to buy or whether you want to sell if you have any inclination to do that. But again, just sitting on the sidelines is not a bad idea in markets like this. One more thought. I've had people ask me about my buy and sell schedules. And here is what I did years ago. I set a schedule for where I wanted to buy silver. And that was way back when silver was about $30 an ounce. And what I would do is I would buy silver every $2.50 that it would drop. And I can remember one time I had some good friends ask me, where's your next buy point? And I told them it was at $12. And they said, it's never going to get down to $12 again. And I told them, I don't think it's going to either, but if it does, I have a plan for it. Well, lo and behold, it went down into the $12 range, and I was able to buy quite a bit because I had money available to do so, and I had a plan to do so, even though I didn't actually expect to pull the trigger on that part of the plan. Well, it's the same thing with where we are now. I've had a sell schedule for quite a number of years at every $2.50 up, and then every $5 up, and then every $10 up. And now I have one at every $25 up. My next sell point is going to be $125, something that seemed out of the question years ago. But I have a sell schedule that goes all the way up to $1,000. I don't expect it to get to $1,000. Some of you do, and that's great. If it gets there, I've got a plan. I would encourage you to get a plan as well. Your plan does not have to show what you think something is going to happen in order for you to be able to take advantage of the things as they happen. I was able to take advantage of buying silver at $12 an ounce, and I was able to take advantage of selling silver at $100 an ounce, even though when I made that plan, I didn't realistically expect to see that, at least not as soon as we did. And so get yourself a plan, put it in place, make it something that you can afford, make it reasonable as far as the increments in which you buy and sell, and then just stick to your plan if you're of a mind to do that. But if you're just getting this for insurance as a hedge against uncertain events, and you want all of the silver that you have to go into that hedge, by all means, just continue to add to your stack on a dollar cost average or as opportunities come up. And I think you'll be very pleased with that. But if you do want to take profit every once in a while, even though there will be 5 out of every 10 people that will call you an idiot for doing so, go ahead and take the profit. Nobody's ever lost money taking a profit. Nobody will. Has the market continued to go up past my sell points? It sure has, but it's also continued to go up way past my buy points. And so that's the point of having a plan, is it allows you to take advantage of both directions. Well, that's the video for today. I hope it gives you something to think about, but I do appreciate your taking your time to watch today. If you have comments, please share your thoughts in the comments. I appreciate those of you who have been doing that. Certainly appreciate those of you who have subscribed, and I appreciate you for watching today. But hopefully that gives you a little bit of information to chew on until the market opens again. Thanks for watching. I hope we'll see you again next time. God bless.